Hey guys, what's going on? Paul here. Welcome back to another Cardano video. So today I've got someone on the channel who was on it a long time ago. Alexander came on to talk about, kind of educated me on NFTs way back when they were coming out first, when he was bringing out unsigs. So Alexander, it's great to have you back on. You have a whole new project coming out now, so we'll get into that. But first, just let people know who you are, and thanks for your time today.
Yeah, thank you for having me again, Paul. My name's Alexander. I've been in Cardano for a couple years now. I got into crypto in 2012, 2013, mining Bitcoin. I left when FPGAs and ASICs came online, and it was clear all this is going to China. It's not going to be decentralized. And I basically hibernated, waiting for proof of stake to become a thing. And I was really lucky to find, while I was studying Haskell, Cardano kept getting mentioned a bit in the subreddit that I was reading. So that brought me out of my crypto winter. It's been a crazy couple of years. I was lucky to do unsigned algorithms kind of early on in the NFT scene. And it's kind of shaped my view on NFTs and Cardano. And so I'm happy to be back with a dApp now that is being turned on live very shortly on mainnet.
Yeah, so I suppose sometimes you're seen as the person who's negative against NFTs, but you don't hate NFTs. You just want them to do more than be a picture.
I want them to do, yeah. I want them to do more, and I want them to do less. I think, I'm actually fine with NFTs just being art, right? Like if they're just art. My background's in architecture, and we say there's a line between design and art. Design are like creative things with utility, function. There's a famous saying, form ever follows function. It means like the shape of things should follow what they actually do. But I think that what's really disheartening to me about the NFT space is it seems to just be like coordinated Telegram pump and dump groups with JPEGs. And I think that actually causes a bit of a crisis for a blockchain like Cardano, which is not about, price speculation and pump and dumps. And people kind of lose the plot when they think investing, it's not just about getting rich, it's about allocating capital. And if you allocate capital well, you can increase the capital you have access to, right? By basically perceiving that something is worth more than what people are valuing it at now. But if you throw money into crap, then you will walk away with less capital, right? And that actually is, again, as a side effect, you get rich or poor, but that is providing a really important thing to an economy, which is to, put capital into people who are building and increasing what we can do as humans. So a little bit of a meta thing there.
Nice. And actually, I have loads of notifications popping up here. I close them. They're all catching my eye. Sorry, normally I do this before, but
no, it's fine.
Forgot to this time. But getting into, so Guchi, what is it? What will it allow people to do? It's not just out to kill NFTs, but what's the functionality of it?
Guchi is a peer-to-peer marketplace, essentially, where people can borrow and lend their NFTs out, right? And what that allows you to do is, if you're bullish on something, you buy low, you assume that the price is going up in the future, and you sell high. All shorting really is, and if you notice, that the word short doesn't really, there's no short button on Gucci. What people do when they short is they borrow an asset, they sell it. So they sell it before they own it, and then they buy it back later, and they repay a loan that says like you owe one of this thing, right? And so it's sell first, buy later, and that allows you, if you're selling first and buying later, that allows you to capture some of the downward price momentum and turn it into gains for yourself. And what I mean by two-sided marketplace is just like Airbnb. There's hosts who have an apartment, and there's guests who seek out, accommodations. Gucci is not putting any capital in play. We're not, advocating for anyone to short specific projects. It's just like, if you have an NFT and you want to lend it out, earn some yield, you can do that. If you want to borrow an NFT, you can do that. The same way that most, even a lot of Web 2 companies work. Uber has drivers and passengers, it's a kind of standard thing. So two-sided marketplace.
Okay, so I suppose there are some similarities there are lending protocols out there for you can put up your NFT and you lend it, but you get the same NFT back. You're guaranteed. The person who is on the other side doesn't get that NFT, but yours is different to that.
So yeah, it's actually the opposite of most lending platforms. So in most lending platforms, you put in an NFT as collateral. Let's say the NFT is like a space bud worth 5,000 ADA. You might be able to get a loan for 4,000 ADA. It's under collateralized, right? Or the NFT is, quote, worth more than the ADA you're getting.
We'll talk about that in a second.
Yeah, let pretend. But the idea is like, let's just put face to this. I have a space bud. You have ADA, right? I need ADA for some reason in my real life. So I will lock my space bud in the smart contract, which you then say, yeah, I'll give you 4,000 ADA. And if you don't pay me back, you get that space bud, right? And so I'm making interest payments, you know, however the contract is laid out, once a week, once an epoch, whatever, paying back 10% of the loan. And presumably I'm paying you back more than 4,000 ADA to make this interesting to you, right? But the NFT stays locked in the smart contract. If I default, you can claim it and then you can go try and sell it. Gucci is actually the opposite. In Gucci, if you want to sell a space bud that you don't have, so you can start a short position, right? You'll say, I'll put 6,000 ADA into the smart contract and I want to borrow a space bud for 4 weeks. By the way, I'm using space buds because, you know, nobody really has ill will towards space buds, and I'm not trying to attract FUD or whatever. So just as an example, right?
Yeah, it's a dangerous thing to name an NFT project because you can get a lot of hate, but space buds is one of the first. It's one of the most popular out there. So I think we're safe to use that. It's not you hating on the project.
Yeah, I love Alessandro. Alessandro knows this, right? This kind of thing. There wouldn't have been unsigs without space buds. So it's purely example territory. So, but for whatever reason, you're bearish on it, right? So you put 6,000 ADA in. You say, I will give you 2% of 6,000 ADA for a 2-week loan because you think space buds is going down in price. So if I have a space bud, I could say, you know what, I believe in this project, but I want to, you know, this space bud isn't doing anything for me, just sitting in my wallet. So sure, I'll send the space bud to the smart contract. And what happens is when I do that, you know, I get paid 2% of 6,000 ADA, first of all. And we'll talk about what kind of APY that works out to. And you get the space bud. It's then on you to go and sell that on Jpgstore or on Gucci using our HODL feature, right, that we're calling. And then you have to wait to rebuy it for cheaper. Let's say you could sell it for 5,000 ADA, right? Boom, you made a sale. If the floor drops to 2,000 ADA, you buy another NFT for another space bud for 2,000 ADA. You send it back to the smart contract. You sold for 5,000. You bought for 2,000. That means you cleared 3,000 ADA minus the fees and everything. And now you, by sending the space bud back to the smart contract, you've got your 6,000 ADA collateral back, right? So the collateral is there as like a upfront margin account, essentially, to say, you know, if you default, I will essentially have sold my space bud for 6,000 ADA. So it's basically either I get back another bud and I'm happy, or I get your collateral and I've executed a sale and I'm happy, right? So there's no way for me to get burned as the lender, as long as I use collateral that I'm okay with.
Yeah, so I suppose what you accept for your space bud or whatever NFT it is, that's the price you're basically willing to sell it at. You're happy to sell it at that price. It'll be above market value or based on.
You could almost use it as a DCA out, right? Like you're saying, I'm not happy with the floor right here. The floor, well, I'm sure we'll talk about that in a second.
Hold that thought for a minute.
but if you could almost use this strategically to say, you know, this is my exit target for this NFT. There's 2 ways you could use Gucci. The safest way is this exit target way. Like I'm happy if the price, I would be happy to sell this NFT at this price. If you do it that way, you will never be disappointed in Gucci because you will either get that amount back or you'll get another NFT from the collection and maintain your exposure to the project, right? As long as you're putting in floor NFTs. The second way, which is riskier, is to say, I would not be happy selling my space bud at 6,000 ADA, but I don't think the floor is going to go to 6,000 ADA. So, because in that case, what you're saying is you're making a bet essentially that the price volatility of space buds is not going to exceed 6,000 ADA. So the borrower, you, has an incentive to close their position by replacing it with another bud and limiting their loss. Does that make sense?
Yeah.
Once the floor exceeds the collateral, we shouldn't expect Paul or the borrower to come back to the contract, because there's no reason to. Like, it's just a write-off, essentially.
Yeah, and just on that as well is that, unlike in a lending platform, it's always the same NFT that is exchanged. With yours, it's one from the collection. It doesn't have to be the same NFT. So if you have something that you consider really rare, you don't put that one up. You put up, let's say, common, because
exactly,
the floor or the base level of the NFTs, they're the ones that this is generally targeted at.
And I'll make the point again. In most lending platforms, the NFT doesn't move. The NFT sits in the contract, right? And it's just the ADA that's moving in and out. That's, you know, the loan, and it's just like the NFT is the collateral. In our case, the ADA is the collateral, and you're actually taking possession of the NFT. And as you point out, like, let's say we're all part of a family, right? And we all have the same surname. We're saying, you know, I'll lend you out Paul for the weekend. You got to return me another, you know, whatever. I'm not going to dox you right now. I can't. Another person from Paul's, you know, surname, his tribe, has to be returned to me, right? Like, any Paul is fine. And so when we say space bud, right, we're saying anything with this policy ID needs to be returned to the contract. I don't care if it's space bud 1 or 10,000 or 7,000. And yeah, so people should not be putting in NFTs to the contract that they're not okay with being replaced by any other NFT in the collection. Mentally, I think this works because the vast majority, plurality, but maybe majority of most NFTs in collections are floor NFTs, right? And it's where all the liquidity is. It's where, you know, a lot of the action happens. So I think it works.
So let's move over to floor NFTs, floor price. You're the first person that I've seen being fairly vocal about this. And I mean that in a good way, to try and explain to people that the floor price isn't the price that you can sell your NFT for on that day. So I'll let you get into describing what this is and bring it back to trading terms, I suppose.
Yeah, is it okay to share my screen for a second?
Yeah, I'll bring that up.
So this is just a Binance screen. And what I want to point out to people is, if you go to Jpgstore or any of your favorite NFT platforms, all the listings you see are essentially sell orders, right? I have this thing and I'm willing to sell it for this price. So if you're used to buying fungible tokens on an exchange, those are things that would appear in this red over here. They're what we, you know, affectionately call resistance. Let me change the levels of this so it's not so dumb. You can see here, there's maybe a bit of a sell wall at 17,500 ADA right now, another one at 18,000 ADA, right? And you kind of know this because a lot of NFT flippers, you know, will count down like 100 NFTs to this floor price, or only 5 more NFTs to this floor price. Those are all measures of resistance. So one thing that Guchi is doing is, because our contract is kind of generic to the policy ID level, which is the thing that kind of ensures cryptographic security on Cardano, right? For any token, fungible or non-fungible. We are genericizing and saying, you can make an offer to pay X ADA, 50 ADA, 100 ADA, for any token from a collection. So what I can show here is, this is an example policy ID for some made up token on pre-production network. You see this this chart over here is kind of similar to the green side of the chart over on Binance. What it's saying is that, you know, somebody has put in an order for 770 ADA for one of anything from this collection. The next level of support is 660 ADA for another one. Then it goes down to 500. And then you start to see there's a decent amount of support closer together in like the high 300s, you know, low 400 range. And this is actually, I think, people focus a lot on shorting because it kind of grabs people's attention, but this is probably the biggest and most important feature in Gucci, is being able to have instant liquidity to exit a NFT position at any time without having to make a listing, right? Like if you've got an NFT worth 10,000 ADA on paper, it's still quite hard to sell it, right? Like to find a buyer, you got to go on JPEG, put it up for sale, hope someone else doesn't undercut you, and that someone else will buy this thing. And so, what I think will be really cool is good collections that actually have demand. I think will have strong buy walls underneath their floor, and I think that will de-risk holding those NFTs to a certain extent. Because not de-risk entirely, but make it less risky. Because holding on to 5 of these NFTs, if you know that at any time you can just go on Gucci and dump them and claim some capital, that to me is very different than hoping that you can sell an NFT. Does that make sense to you, Paul? Where I'm coming from?
Yeah, and I think it's important getting that message out there. Sometimes when people, they have an NFT collection and they look at it and they look at the floor price and they base the value of the portfolio on that. But a lot of times it could be 1 or 2 people sell at, let's say there's a 5,000 floor. There could be 1 or 2 people come in and sell at that, and all of a sudden the floor could drop to 4,000 or something like that. What you need to look at is what are the bids, and it's something I don't think has really took off in the community yet. I know Jpgstore now allows you to make a bid on any NFT in that collection. And it's something I would like to see kicking off, that people start to put in bids rather than just go straight to buy the floor. It's like you said, it's the market order versus a limit order. So putting a bid on the collection is like your limit order of what you're willing to spend on that collection.
And I think that some people have asked the difference between this and Jpgstore. I'm not sure, I could be wrong, but I believe on Jpgstore you can make an offer on a specific NFT, right? Like, so if I want like that bull, like I'm putting a bid on like the bull with the gold ring, space bud kind of thing. And basically what that means is there's one person in the world who can approve that trade. Right. So it's kind of capital inefficient, because you're basically hoping that one person in the world, sees that offer and they accept it. Right. So you're tying up all this capital for maybe nothing to happen. Whereas in this case, anyone who has one of the NFTs from the collection you're bidding on can fulfill it. Yes, you don't get to pick what you're getting, but my feeling is that most flippers who are getting into a hot NFT project, they tend to just try to acquire some floor pieces, right? That's why we joke they're altcoins with JPEGs, right? Like it doesn't really matter what one you have. You're just trying to get in quickly. And so what this allows you to do probably is get a discount over a bid-ask spread. All of these Jpgstore listings, or I keep saying JPEGs, nothing against JPEG, all these NFT marketplace listings are asks. I have this and I'm asking this price for it. What this allows you to do is essentially set a bid. If you're willing to not pick, you'll probably get a discount. You can put it below the floor. I would argue this is the new floor, essentially, because this is actually support. Whereas the asking prices, we should really call them ceilings or resistance. That's one thing I hope this does.
Yeah, and coming from the trading side, that makes a lot of sense. And hopefully what we've went through there kind of explains to people who mightn't have come from that side as well of the difference in a floor versus the actual bids that are on it. And with this, will people go on to Gucci to actually make the bid, or where is it your smart contract then holds the ADA? Do you buy it on Jpgstore then?
Yeah. So there's two. If we just talk about HODLs right now, right? If I want to make something, I connect my wallet. It's connecting. Let's see what's going on here. I might have to refresh this. Refresh, connect wallet. Live demo is always fun. Okay, wallet's connected over here, right? We hit create HODL. because I'm on this page, the policy ID is pre-entered for me, right? Because I'm looking at this project's thing. I say I want to buy one of these things. I set the price that I want to buy it for. You know, I'll actually make a new one. I hope I know test data in this wallet. No, I don't. So you would do that, and then it would appear here as there's a new offer. And you're right, the ADA would be locked in the smart contract, right? Because you're essentially prepaying for it. If somebody wants to tap into that liquidity, that is, they would do that here, right? By clicking sell. This is telling me I don't have any assets from this policy ID. But if I did, I would be able to select a token, you know, a Spacebud 7321 or whatever. I would choose that. I would submit it. I would get the 777 ADA that's in the top offer, and that person would get the Spacebud that I had selected. So there's no interaction with Jpgstore or anything, right? And then the next highest offer would be this 666 ADA listing, right? It would no longer say sell 777. The new top offer would be, you know, this level, and it would keep going down anytime someone consumed the highest offer.
Okay, so do you see a part in the future where you will interact with other marketplaces, or will Gucci always be the place where you want people to come here? They put in their hodl position here, or their bid, whatever you want to call it. Is that where you're going towards, or is integrations with other?
We're happy to integrate. You know, like we have certain fees that we collect. One, any ADA that is tied in the platform is staked under our staking key. Okay. We want that to be the primary way we generate revenue. That basically any TVL that's locked in the smart contracts, we are generating, you know, yield from that float for the 2 or 3 weeks that these things are live, right? We do also have I think a 2% fee on the collateral that we take. We'd like to lower and or eliminate that depending on how people are using the platform, and switch to this kind of TVL yield liquid staking model where we are, if people see value in what we're offering, you know, we're generating our income based on that. So we are happy to integrate with other people. We have open sourced the contracts, I think yesterday, but there's also various endpoints, you know, kind of Web 2 stuff to make this easier to work with. If someone wants to be fed or be able to interact with our listings, we're happy to teach them how to do that.
Okay.
I think CNFT Jungle is working on some cool stuff, and I think he's actually on his main job as a Jpgstore employee, but basically merging, you know, the asks from Jpgstore with the hodls from Gucci to show this kind of market depth chart that we were just looking at with BTC right over here. But that's kind of how I see Cardano going, is lots of small independent modular dApps that kind of get composed together into smarter behaviors. We're not trying to be an NFT marketplace, to be clear. Like you don't even see NFT pictures on this stuff, right? Like if you click on something, you can see the name of the asset. So you would see like Spacebud 7321, but we're not trying to be we're not trying to compete with Jpgstore at all.
Yeah, people who use this don't care what the NFT is. They're using it as a financial tool or a trading tool, essentially. That's their core use of this is for financial gain on their own side, or speculation on that gain.
Yeah, and so we're not technically, actually Gucci works for native tokens as well, or fungible tokens, right? So if you wanted to short MinSwap or whatever, right, any kind of DEX token that is just printing money and going to zero, like that's something you could do with Gucci, right?
Okay, so that'd be a similar thing where I put up X amount of ADA for, and I would say how many
100,000, of the token that you're looking for, right? And and this is the key thing for people who don't really understand shorting. When you take out this loan, it's denominated in the unit of the thing you're borrowing. This is how people make money with shorting, essentially, right? Like if we'll just talk about Tesla shares to make it easier, right? When I borrow Tesla stock and I sell it for X amount of US dollars, whatever I sell it for doesn't matter for the purposes of the loan, because I owe 100 shares of Tesla. I don't owe the amount of money I got from selling it. So what I'm hoping for is that it's because I sold the 100 shares up here. If I can buy 100 shares of Tesla for cheaper, I can repay my loan, and I basically made money that way. I will also point out, I've never made money shorting, because I always, right whenever I open a short position, there's some bull trap that liquidates me, and then it continues to go back down. I made one time I made money shorting Luna before it blew up, but that was an exception.
Yeah, I always struggle. I've done a lot of trading over the years, but I always struggle with the shorts, because generally my head is telling me, yes, it probably will go down, but then the heart is telling me, oh no, I always want crypto to go up. It's that struggle of, if it does start to go up, then I start to panic. Oh, maybe the head's wrong, and there's that go between. But
so there's one thing about this that is quite interesting to me. There are no oracles involved in Guchi. And that's kind of important, because how this works is it's all around the incentives to the borrower and the lender to behave correctly, right? So if you borrow an NFT, you have an incentive to behave correctly and pay back the loan, as long as the floor is below the collateral. But even if you've defaulted, or if the price has gone beyond the collateral level, I can't claim as the lender the collateral until the loan has actually expired. Does that make sense to you? So this duration is in days, right? So even if we do this loan and then the floor pumps to 5,000, on a normal platform, you'd be liquidated and I would get the ADA. What people need to be aware of is, like, this is a very dumb smart contract that says, well, technically you're out the money right now, right? Like the price has gone up, but I can't claim the collateral until the duration of the smart contract has transpired. And that's a little bit interesting for a few reasons. One, it means you as the borrower are less, kind of a little bit less risky than a normal short, because again, you've put this collateral up front. Even if the market temporarily moves against you, as long as the market comes back in your favor before the end of the loan, you're fine. Does that make sense?
Yeah, I would say it's a dumb smart contract, but it's also what smart contracts should be doing. It's executing what the initial terms were agreed upon, and nothing can change that in the middle unless the two parties actually change it. So the contract doesn't care, or Gucci doesn't care about what's going on in, we'll call it the real world, or the actual marketplaces out there. It only cares about what the two entities agreed to at the start, which is a great example of what a smart contract should be to me.
I agree. And so, like, I think this is a feature, right? It's that, one, you can't liquidate someone just by like spoofing an oracle, right? And making the oracle think the price has gone up, and then, and that's something we wanted to avoid. And so I do think it is, the way I describe it is like, you, the borrower and the lender, are the oracle. You're bringing your knowledge of the outside world to the platform, right? And saying, this collateral level is kind of outside the bounds of volatility, I think, right? This is what I'm going to charge. The fees are all, other than the platform fee, the lender fee is set by the lender. That's why I say it's a two-sided marketplace, right? Like, so lenders are competing to offer the lowest collateral, the lowest fee, and the longest duration between each other, because that's what's most attractive to a borrower. Borrowers are competing to offer the highest collateral, the highest fee, and the shortest duration, right? Because those are more likely to be, advantageous to the lender. And so there's kind of this bid-ask spread of lending terms that is being fought over, that I think is quite elegant, and I like as a free market solution to the problem.
Yeah, and the fee that's been put up, the percentage or the interest, is that regardless of if I close out the position early, I return the NFT, is that fee set for?
That's it's not per diem. It's just a simple single one-time calculation based off the collateral, right? So this number right here is saying this is a 2% fee, on a 1,300 ADA collateral. That means it's 26 ADA. So you will get 26 ADA, or the lender will get 26 ADA and an NFT, or they'll get 26 ADA and the collateral, right? And even if you return an NFT tomorrow. So these are not APYs. These are raw percentages based on this. It's actually irrespective of duration, right? Like if you enter into this contract, this other person is going to get this fee. And whether you use it for a day or you use it for the 10 days, it doesn't matter, right? It's just a one-time done thing.
Yeah, that's the way as the lender that I would like to see it, in that I know I'm getting this back, and it's not if the person decides to return the NFT early that my interest gets cut or something like that. So
exactly. So if you want, there's different ways you could. There's not always like a best lend or borrow offer. It depends on your individual terms that you're seeking, right? Some people, why I say borrowers or negative sentiment people probably want longer durations. You know, the famous phrase, the market can stay irrational longer than you can stay liquid.
Yeah.
Right. Like you might be bearish on an NFT project, but you don't know when exactly the bubble is going to pop. And so, you know, you're willing to pay a larger fee and cut into some of the gains from your short position if you have a longer time window to be right? Like if you want a 2 or 3 month or 6 month, you know, short, you have to pay a decent chunk of money for that, right? But in exchange, your risk is a little bit different, or quite a bit different, right? Than being, I'm right and I'm right now, right? Like that's a very different proposition.
Yeah. Is there an option for, we talked about, we say a dumb smart contract where it sets the initial terms, but is there an option to update them, the term, if both parties agree, or is that something you would look at later, or just leave it?
Yeah. Version 1 is just this, right? Like it's the terms as is. Things that you're saying, what we would like to do in the future, which is I think really interesting, is right now this is all based around like public key hashes, like your wallet. Your wallet has the right to interact with the smart contract, so that, you know, if you put up the collateral, not any, you know, buddy else can claim your collateral. It's your set of keys that are able to do that. But what would be really cool, and what we're thinking about doing in the future, is turning this into a NFT itself that represents the position. So imagine you're out the money. You could try and sell the right to claim the collateral in the contract for, you know, pennies on the dollar to some other person who is like, I'm just going to scoop up, you know, deep out the money calls.
Kind of like your options and stuff like that, that you can pass off the loss and hopefully recoup more on someone who's willing to take the risk that it goes the other direction.
Yeah, this is essentially like NFT-fi, right? Like how to get some derivatives for free or other kinds of. I'm not big into Greeks and, you know, alpha, gamma, whatever, all those kind of fancy things. But I'd say the closest thing that this is kind of like a covered call option, right? If you're lending, like the collateral is the upside below which you will not see any gains, and you're getting some kind of yield for, you know, providing this service to other people. Does that make sense? You're more of a finance guy than I am.
Yeah, I suppose people could end up, if people are buying the NFT or the NFT representing this trade, they're actually buying the underlying NFT as well. That's what they're guaranteed to have, that out of this worst case scenario. If
we were NFT-ifying the position, I think it would be a little bit, because the NFT is not linked to it. When we say NFT, what do we mean NFT? What we're meaning is like there's a token which represents your ability to interact with the contract. But this is we should just probably stop this. Like it's a little bit.
We're probably getting into stuff that hasn't been worked out yet.
But right now,
what's there now?
So exactly. So you know, you're going to borrow an NFT either by making an offer to borrow, or you're going to close a position, an offer to lend, right? So you're going to get an NFT. And then I think that what most people will do is they will look to the left side of this page and say, okay, I can open my short by selling for this price right now. This is the reason when we first talked about this 2 months ago, HODLs were not part of the picture. We were just talking about doing lends and borrows. But we heard a few things caused us to redevelop this. One is people were saying, like, if I borrow an NFT, there's no guarantee that I can sell it, right? So you could just be borrowing an NFT and then be left holding this NFT that ostensibly you don't like and not able to sell it on Jpgstore. So you can't even really open your short position because you've just borrowed Tesla shares and you can't find a buyer of Tesla, right? So we decided to do this for part of the reason was so that shorters could basically open their position, right? And say, okay, if I borrow an NFT, at least I know I can exercise the sale of it for this price, right? And then the other reason was that, you know, a lot of people are concerned about whale manipulation and fudding and all this kind of stuff. So HODLs, the reason they're called HODLs is like, I visualize this kind of a Braveheart scene of, you know, like HODL the lion or whatever, right? Like I imagine that this HODL feature is actually the front line between bears and bulls, right? Where this is where they're kind of interacting, and bears can sell into the line to push the floor down, and bulls can put in ADA to say, no, I'm willing to buy one of these for this price, right? And it gives you this kind of front line of combat essentially between people who are positive and negative on the project. And that's what free markets are about, right? Is who express your sentiment with skin in the game, and you can laugh or you can cry depending on the results. But that's kind of part of the idea. And yeah, it felt like this kind of metric or this market depth was such a better kind of indicator than things like floor price or total volume sold, which is so easily manipulated by, you know, unscrupulous projects and that kind of thing, that this felt like a way to use free market properties to give. Yeah,
you can see what the real world values the project at now.
Yeah.
So I suppose before we close out, coming to the end of my questions is on funding. Has the project been funded? Is there a token coming?
It's a pure sweat equity. We haven't raised any funds. People often ask, can I short Gucci? Unfortunately, there's no token, right? If there was a token, you can short unsigs. We are not about censorship. We're not about trying to direct FUD towards anyone with this platform. Like, if you don't like something I've done, you can short the tokens, right? Anything that has a token on Cardano can be lent and borrowed using this platform and potentially profit made or lost.
Okay, yeah, that was actually what I thought of earlier and I forgot about, was that anybody can come in once they do it on the policy ID. They can start opening positions. You, as the owner, don't have to approve or anything like that.
There's no whitelist. Like I'm kind of a little bit of an anarchist, and I don't believe in like crypto being gate kept by people who have opinions about what is correct or incorrect. And so I'm very happy for people to short things that I've made on Cardano or my friends have made or whatever, right? Like, it's not about are we right? It's about allowing people to express their economic intentions on a blockchain.
Great. Anything we've left out here that would be good to add in before we close it out? Or?
There's a Discord if you have any questions. There will be some more walkthroughs. We tried to keep it a little bit high level in this talk, but there will be some more video tutorials showing exactly, like, screen by screen how to open one position or another. The one thing I'll also say, people often wonder, like, why would I lend my NFTs out for other people to short them, right? So very quickly, if you have a 1,000 ADA NFT and you're lending it out for 1,500 ADA collateral for 2% for a 2-week loan, that works out to like 78% APY. You'd be earning 780 ADA if you kept doing that every 2 weeks, 26 times a year. So on an 1,000 ADA asset, you'd be potentially earning 780 ADA I don't know what people will charge or accept in terms of the percentages and the over collateralization versus the time. But on these, the way I think of it, like people buying and investing in NFTs right now, it's like buying real estate and not renting out the assets, right? Like you could generate yield with this allocation of capital, but instead it's just sitting in your wallet doing nothing. And so, you know, I wouldn't call this staking, but it is a way to generate yield and income streams from otherwise statically allocated capital that's just sleepy in your wallet, right? And so that's the incentive, just to be blunt. Like you are being paid by people with negative sentiment to, you know, temporarily hold your NFTs. And I think that is a big way to kind of tap into some potential gains for people who are on paper very wealthy from their NFT collection, but maybe aren't able to generate any kind of income or additional yield from that asset.
Okay. Yeah, I think that's a good place to finish it out. I'll put the links for Discord, Twitter, and the site down below. They're the best places to keep an eye on. And time frame of when this goes into production.
Hopefully tomorrow or Monday is what we're looking at. So okay. Very, very soon.
Actually, in terms of me saying timeline there, this video, it'll be a few days before it comes out. So potentially it'll be live before this comes out. If it is, then you'll be able to access the platform on the website anyway.
We'll shoot for Monday in that case. Give you some time.
Okay, well, I'll aim to get this out before the weekend's up, and it'll go live then a day or two later. Awesome. Thanks very much for your time. It was great to meet you as well at the Cardano Summit this year.
Yeah, fun.
Meeting so many people. It's such a difference meeting people in person, and sometimes what goes out across Twitter and different spaces, you don't see who the person really is. But when you can sit down, have a proper chat with people, it's great. I've made a lot of connections there from meeting people in person. So.
Oh, we'd love to have you down in Lisbon sometime, Paul. We're trying to start a little Cardano hub down here. It's really advantageous for, you know, investors and other people holding crypto. Even next year, the rule is being changed to if you hold for longer than a year, there's no capital gains when you sell your crypto. So good stuff.
Yeah, and look, that's for most people who get into crypto. I think that new rule coming in is still fine. If you're getting in for longer term, it's not a big deal anyway. But thanks very much for your time today.
Thank you, Paul.
Keeping track of the project, and look, we will connect at some stage again in the future and have a chat about Cardano in general, NFTs, what's going on, and your own projects as well.
Would love to. Thank you for what you do, Paul. Cheers.
Thanks, man. Talk to you soon. Anyone who thinks this could be valuable, please do share it out. Comment questions or anything like that down below. I'll try and pass them on as well, and subscribe if you're new. Thanks for watching. Talk to you soon.